Considering how macro bullish I am on the long term of crypto, Bitcoin, this video that I'm recording right now is not the most fun or enjoyable visualization exercise to go through, but I have to go through it. You know that a principle, a foundation to everything that I do in terms of my technical analysis and my approach to crypto is based on expecting nothing but anticipating everything. And in anticipating everything, we anticipate crazy, awesome breakouts to the upside, long-term just breakout trend for Bitcoin and crypto. But also in anticipation is anticipating worst case scenarios. And we often talk about worst case scenarios, even in the short, mid, longer term. But there's one scenario that I really haven't talked about at all because it really wasn't so much in play as it kind of is right now. And I want to explore if a 2008 scenario plays out in the stock market, because I'm going to show you a monthly chart, S&P 500, and the charts right now lining up so similarly, but it's the narrative of banks falling that could be a little bit concerning. And so in this exercise of anticipating, I'm not trying to sit here and say that I think this is going to happen. I'm not sitting here saying sell, get out. I'm not giving any type of advice at all, but I'm doing what I do in my own time, which is I'm speculating and I'm visualizing these scenarios, because if something like this happened, I want to be ready. I want to be prepared. And that's what I'm here for. That's why I'm doing this YouTube channel, is to track that journey. So I want to show you a clip, actually a couple clips from this video that I just came across. And then I want to show you the charts and show you the similarities. And I want to discuss what it could mean for crypto. So check out this first clip right now.
In a matter of days, one of the pillars of Wall Street.
In March of 2008, the investment bank Bear Stearns ran out of cash and was acquired for $2 a share by JP Morgan Chase. The deal was backed by $30 billion in emergency guarantees from the Federal Reserve.
Now let's look at, this is the beginning of banks starting to fall in 2008. And let's look at what S&P 500 was doing. And I just want to look at it on the monthly chart. So I'm going to make this incredibly easy. So this was March 2008. We just looked at the clip, things starting to get really bad in terms of the headlines. Right here, this is it on the monthly chart. You can see the S&P 500 was already in this downtrend, right? We're looking at a dip of around 20% or so. And this is March 2008 when that was happening. If we look and take notice real quick of the RSI, this is important on the zoomed out chart. You can see right now the RSI at that time when this was happening, right in the middle here, kind of getting a little bounce, getting ready to have a little bounce to the upside. Now, what I want to do before we look at this next clip, I just want to notice, look where S&P 500 is on this RSI as these banks are starting to fall. And also let's take note of where S&P 500 is just from a downside perspective from the swing high back here, currently down also right around 20%. So the similarities in terms of where S&P 500 is now comparative to where it was then, very similar. So it stands to reason that it is in play that if things get incredibly out of hand and bad, then we might see this similar setup on these charts. Now let's start kind of talking about what would be next in that regard.
On September 7th, 2008, Henry Paulson announced the federal takeover of Fannie Mae and Freddie Mac, two giant mortgage lenders on the brink of collapse.
Nothing about our actions today in any way reflects a changed view of the housing correction or the strength of other U.S. financial institutions.
That's September 2008. Let's look at the same monthly charts and discuss and look at what S&P 500 was doing, but maybe more importantly, what it was getting ready to do. And so in regards to what it was getting ready to do, we just saw in March 2008, the first part of this scenario setting up. We got a little bounce over the next few months to the upside, but then here we go into September 2008. Months later, things were getting worse. And this is kind of the setup for where we are now. If months go on and things don't turn around in terms of banks falling and things get very bad, this is the setup. This is what S&P 500 was doing right there. And again, if we go to our momentum oscillator and we look at this, this was the beginning of a very big fall to the downside to oversold areas. Now, this would be the case for S&P 500 over the coming months to fall to oversold areas. If we do the very simple method of just taking our bars pattern and we take this swing high to that kind of capitulation area and we just put it over the chart here, we get a sense of what's possible, right? And then we take our price range and we're just kind of like, okay, from the, let's say the September monthly open to that swing low, 50% dip. And then we say, okay, from where we are right now in S&P 500, maybe before this happens, we're up a little, down a little, but let's just take it where we are right now. And let's look at a 50% dip for S&P 500. Now, this is that scenario. If the next 3 to 6 months get bad, this could be that worst case, crazy, oversold, high fear, high opportunity scenario. And again, this is a speculative exercise, a visualization exercise, because we know that anything is possible. And if this were to happen, I just want to note, this looks extremely bad on this chart back here. And you can just see this huge swing low into February 2009. But this was the land of opportunity, and it came quite quickly. It was extreme fear during the fall. And so I think it's just wise to anticipate something similar happening. Just this huge capitulation over the next months into oversold high opportunity areas. Now, I'm just speculating here. That is all that I am doing. And I just really wanted to give you a sense of what it looks like on the charts, because at the end of the day, this is really the chart that I think many of us are very interested in. And it's that zoomed out monthly chart for crypto. And this is what I'm looking at. So the first thing to note is if we go to the weekly chart, actually, just assuming right now, even if that terrible case scenario doesn't play out, there's 35% to the downside, right, in play for Bitcoin, right around 34% to the downside to this 786 macro line. That's a 35% dip for Bitcoin. Even if that were to happen, Bitcoin, in my view, and I say this a lot, bullish on the macro. It's a higher low. Now, this is the scenario, though, where we start saying, okay, if S&P 500 fell 50% over the coming months, is Bitcoin really going to outperform and just do something spectacular and completely just separate from S&P 500 and stock market and everything going on? I mean, we can always say it's possible, and we would like to think that could happen, but I always think it's just safer to just say, hey, it's going to be correlated and Bitcoin's going to fall. So we have that 35% to the downside target. Maybe that does happen over the coming months, but 50% dip for S&P 500 now, what would that look like for Bitcoin? It could potentially look like just capitulation to just $10,000 to $15,000 area from where we are. The good news, I think, for Bitcoin charts right now is just the fact that we are getting this, and this is a weekly chart, this nice separation to the upside. Even from the bottom of the bear market, we're just getting a nice cushion put in play for if this terrible case scenario did play out, Bitcoin has cushion to the downside. Maybe Bitcoin even goes up a little bit more, and it has even more cushion to the downside if things get really crazy. So again, this is just speculative, everybody. I just wanted to put it out there because it's on my radar, it's on my mind, and it's just one of many scenarios that I'm considering. So those are the charts, and that's what it looks like. So for me personally, as I zoom out on this speculative scenario and I really try and visualize, I try to put myself in this scenario where we're getting ready to see 6 months of downside. I really try to live in that speculative scenario because it becomes real in this very second as I'm visualizing. And I say to myself, well, with what I have in crypto right now, with what I have in the bank right now, with how my businesses are doing, with every small little detail of my life, am I ready for something like that? Also taking into account the opportunity that will make itself available if this move happens. So all of these things coming into play in regards to how I approach my day-to-day right now. So the thing is, there's no guarantee something like that would happen, right? There's no guarantee that it will be as bad. Maybe markets are already pricing in this expectation that governments are just going to bail out all of the banks and all of these issues, and they're just going to print money. Maybe this time around, markets are not going to be as fearful as markets were back then, because when that happened back then, this was a really, really big deal. It's a big deal now, but everybody has this kind of nostalgia from 2008, and they're kind of maybe not comfortable, but a little bit more comfortable than they were in 2008 when this was happening. So maybe we won't see a crash as bad. There's a lot of things to consider here, but I think at the end of the day, we just all need to sit back and kind of evaluate our own personal situations, because what I'm talking about here is just my own personal approach, my own personal view and thoughts about the markets, what could potentially be in play, and how I'm handling it. So I wanted to put this video out there just to have a conversation with you, and just to put this worst case scenario type of situation out there, because really, from a technical analysis perspective, from a data perspective, that's really what I try to do on this YouTube channel. So hit that like button for me, hit the subscribe. I appreciate you watching, and let me know in the comments what you think below. I'll see you in the next one. God bless.